I now have the pleasure to bring back Matthew, who's going to moderate our first panel. And if I can ask the following speakers to please come on and join him on the stage. Mohamed Fetta Kretchen, General Manager at SFAX Technopark, Tunisia. Yeah, I'm just going to ask you to hold your applause until I finish all three. Thomas Dubendorfer, President at Swiss ICT Investor Club from Switzerland. And last but not least, Serkan Vergen, Digital Banking Group Director, TEB, PNB, Paribas. And a round of applause, please.
Great, great. So that was a very brief introduction. So I'm going to let each of my panelists tell you a bit more about themselves. And in particular, the focus that we're going to talk about now is about the ecosystem and how you can have the right ecosystem for building and investing, encouraging fintechs, and then making it easier if you're investing in them for them to have a fertile ground to grow in. So maybe I'll go farthest away, and why don't you start us off?
Thank you very much. Thank you.
And you may want to use the other mic so you can look at me and have your voice. And then I'll push this to Thomas, and there we go. I think that's going to work better.
It works?
And if you can't hear us, let us know. And we're going to let you guys get in with lots of questions, so don't worry.
Thank you very much, Matthew. Let me introduce myself. My name is Fetta Kretchen. I'm the General Manager of SFAX Technopark. It's a science and technology park based in Tunisia. And Fintech is one of our main, if you want, activities. First of all, why? Why we choose to work on Fintech? In fact, we have realized that this issue, if you want, or this subject is more and more important in Tunisia, especially that we are going or trying to digitalize many government services, and having this platform, I will say, to better provide services, especially to people who don't have bank accounts, is very important. I'll just give you some numbers, but very small numbers in Tunisia. 25% of the people above 15 have bank accounts, only 25%. In the meantime, we are 10 million and we have 7 million Facebook accounts. So it's easy when you say that to understand that people have already access to digital platforms, they have already access to infrastructure, and they don't have access to the services. So that's why it's very important for us to work on this issue. And you have started talking about the ecosystem. I think that the most important thing is the infrastructure. You need really an infrastructure to start this kind of services. And then you need to support through government, if you want, law and government services, this kind of services.
That's really useful. And just to throw out a data point to bounce Tunisia's data point against. So you were hearing 26% of the adult people only have bank accounts. In Africa, the percentage today is 46% for the continent as a whole. The good news is it was 23% about 5 years ago, give or take. But the bad news is that's still the minority of people with access to formal financial services. And I think you would find, per your point about infrastructure, that one of the major reasons a lot of those people that aren't in there on the scoreboard is that they don't have really good broadband access or even internet access where they live, because you need to have this, at a minimum, a feature phone, and ideally you need to be able to operate a smartphone. And while smartphone prices are going down, and you can probably buy smartphones in Africa for as little as $30 nowadays, you know, whether you can actually connect them and whether you can afford the cost of having a data plan are are two very different issues. So thanks for raising that. Yeah.
I think it's important. It's not only a geographic matter. It's also a gender matter, because in the 25% of people that have a bank account, only 30% are women, and instead of that, you have 49% of women that have a Facebook account. So it's access not only to geographic area, but it's also access to gender, and this is very important.
And thank you for raising. That's a really important issue to raise too, because that's an issue not only in Africa but in many places in the world where clearly the starting point is getting cell phones into everyone's hands, and there are countries where there's without wanting to get too political here, there are significant differences in the numbers of women and the numbers of men that have these cell phones. And that's not based purely on inability to purchase one. It goes beyond those sort of barriers. And so you're raising issues that require governments to think not only about financial issues, but beyond to complex social and political traditions and issues. So why don't we talk more about our host country, Turkey, and what's your ecosystem interaction is here at Turkey Economy Bank?
Well, let me start saying that, I mean, even though what I'm going to be telling here seems to be really a nice setup, but I should add that it's a really long, bumpy road for all the fintechs and the startups, no matter what. Well, at TEB, actually, we're taking a holistic approach, meaning we have different bodies, different departments that are trying to help the new startups. For example, the entrepreneurship banking department that we have, they're trying to mentor, they're trying to onboard all these different companies. They're trying to help them have access to governmental funds so that they can actually fund themselves at the beginning of their lives. They're not just doing this, but they have different programs such as like Level Up, Grow Up, Scale Up. And through these programs, I should say that, I mean, I'm really proud for that department that they are providing this kind of services in return for nothing. That's very important. And also, since they are...
Well, I'm going to take issue with you there because we have an investment in this bank in IFC, and I assure you we look at the investment and every penny they're spending or every lira they're spending on these programs, and at least the numbers seem to indicate that they don't directly yield payment, but indirectly they've been very important to the growth of market share in the SME market for this bank.
Yes, if they choose to work with us, I mean, there's no obligation for them, but if they choose to work with us, and some of them they do, they of course become customers of the bank. So we're doing it at a very large scale. And beyond that, we try to recruit fintechs from different universities, from such programs, even through our efforts, you know, looking at the news and everything. So we try to understand their value proposition. And I think the very important role that we're playing in this aspect is at least we want to be their customers. If their value proposition is a match within the bank, then we try to be their first customer or second customer so that they can actually bill the bank in return for a service, of course, that we're going to be collecting from them. And on top of that, we have, I think we're still the only bank within Turkey that is providing these angel investor certificates. So if you want to invest in companies, then you have to be an angel investor so that you can have some tax deduction. So we're also providing these services. And also we're trying to extend our value to these companies through, for example, the recent changes I think will allow us to partner with a crowdfunding company as well. So through this network, we will be able to, you know, provide them means to have access to the initial funding that they need.
So are you suggesting you could even be co-investing with some of your angels that you're certifying through the bank?
We did for really small amounts, but we don't see ourselves as merely investors. The BNP Paribas group actually is doing that through Opera Ventures, but we're not directly investing, or we're not after equities that the companies have. But we're at least, I mean, I think that is very important. If the company can show that they have built the bank, so they should have earned their trust. I think this is something very, very important in their maturity as well.
So that's very interesting. You're intersecting in many different ways, both with the fintechs themselves and with the angel community. I'm sure people want to talk more about that. But let's talk about Switzerland, where we have someone here who's not only an individual angel investor, but a founder of a network that now I think is accountable for a quite substantial share of of all fintech new investment that's going on in a country that's not short on fintech startups, surprisingly enough.
Yeah, so by education, I'm a computer scientist, so I write programs. And I did that in Silicon Valley, and when Google came to Zurich, I was the first security engineer in Google Zurich. We're just 40 people, a sales office, and over 7 years, they scale up to 1,400 people just in Zurich. So I built up first the security unit and then the privacy engineering unit. And I saw it's possible if you do it. And I got inspired by that. And I figured after 7 years at Google, I should do something else. So I became an angel investor. And one of my first investments was incorporating Fintech together with some colleagues. I was the chief security officer there. The goal was to launch a new product for Swiss banks on a B2B level. So we built the product in 2 years, sold it to 20 banks over another 2 years, and then we got acquired for quite a large sum. So for me as an angel investor, I got 33 times the investment back. And this money I used to invest into other interesting ventures. For example, in South Africa, I invested into 30 startups. Some of them are fintechs as well. They have a lot of different payment systems. Many of them are with mobile phones, but they're not very compatible. So one of them built like a unification layer across all the countries. So if you have an online shop, you can use a specific payment means in a specific country to make your shop more accessible. Also a seed investor in N26. It's one of the largest growing fintechs.
Anyone in the audience have an account with N26? It's a bit of an older crowd. If it was younger people, I guarantee you'd see hands. So I know in our IFC London office and in our Germany office, there are plenty of people with N26 bank accounts. Exactly. But they tend to be much younger than me.
So basically it's the bank on a cell phone. They have no real offices, like physical offices. It's just an app you download, you do all the onboarding in 5 minutes with a video conferencing thing, and then you have a bank account, you have a credit card, everything. They've onboarded 2.2 million customers in the last 18 months, and the valuation is right now 2.6 billion, and they employ about 800 people. So we, as a group, together with the fund, did the seed investments for them, and they're scaling up now across US. They did 13 countries in Europe, then UK, and then US. So you can do it, and most people that founded that were not bankers.
So, let me come back at you, because, I mean, maybe many people in this room, and I was this way until 2 years ago when I went to Zurich for the first time in ages, in Switzerland, right? It's the image of old-style, human-based private banking. What in the world has happened that's enabling this sort of stuff to be going on in a place like Switzerland? What are the changes that have occurred that have inspired this sort of creativity and fintech virtual explosion from nothing?
Yeah, it's quite funny, because when we started the fintech startup I just mentioned, the one with B2B, was 2013, and at that time nobody was even knowing the term fintech. There were like 10 startups that would call themselves a fintech, but nobody in the media would know what a fintech actually is. They were all talking about London and fintechs there, but nobody was talking about any fintechs in Zurich. And so we also created a club, Swiss Finance Startups, and by now it's about 300 that officially call themselves fintechs in Switzerland. Then we also got exposure to the government, because if you want to do banking, you need a license. It's very heavyweight. Starting this year, you can be a bank with 100 million of assets without a real banking license, just like a fintech light thing. It's very easy to get. And this was created with this community of the 300 startups, because we could go and talk straight to the Bundesrat, the highest governor we have. And also now with the crypto development with blockchain, we can talk to all the government officials directly. For example, there's big issues with is there VAT on utility tokens or not? So we talk to the boss of the VAT department straight away, and we explain to them what it means if they tax certain things or not. So the nice thing, if you're in a small country with 8 million people, you can directly interact with almost anyone if you can make sure that you have enough stakeholders that have a common interest. But for that, you need to bundle them. That's very important. So the investor club I have is now 250 investors. Every third investment into ICT comes through us, and we are only operational since 3.5 years. So we have done basically, we have created a new ecosystem for investing into early stage ICT and Fintechs in Switzerland because we believed it's the right thing to do.
Wow. And what are you finding as the most promising areas for fintech investment right now, and is that evolving? And I'm going to ask the other two also for your thoughts on it, because you're all looking at different markets, and I wonder whether you're reaching the same conclusions.
The most interesting venture, I guess, it's obviously connected with distributed ledger technology, because you can really go global very quickly. One project I'm involved in is creating a stable currency, which is based on real assets. So basically, they buy diamonds right now, they store it in Switzerland in a safe place, it's insured. If it gets stolen, you get the money back. And then you can tokenize that and give basically a cryptographic currency which is backed by real assets. And with that, you can basically have a currency for anyone in the world. You don't need to be a central bank, but you kind of have a payment means which is stable everywhere. And the only thing to get access to that is you need to download a wallet, and basically then you need to exchange those tokens, and there we go.
So why does this represent a step forward from just letting Antwerp run the diamond exchange of the world, or letting De Beers or somebody else?
It's about accessibility.
I think I want you to describe it in a bit more graphic detail so that people can, because this is a commodity exchange, and it just happens to be one commodity.
Yes.
But why is this going to be different than, I mean, there's already a kind of mafia running diamonds around the world. What's this going to change?
Yes, it's
Sorry,
especially...
I'm going to be in big trouble for saying that. That was not an opinion of the World Bank Group.
I wouldn't agree that it's the mafia running it, but it's definitely a group of oligarchs that has it. It's hard to access, and the prices in the diamond industry are more a little arbitrary. Depends on who you know, you get different prices. And each diamond is unique. It's not like gold, where you just need to know the pureness and the weight, and that's it. With diamonds, you have 4 different dimensions to use to give a specific value. Now, if you have a grading scheme where you get the diamonds and you know it's a real one, it's not a blood diamond, you have a GIA certificate, you can basically have relative values of an inventory of diamonds. It's not just one, it's lots of them. And then you know what the market value of the whole inventory is. And diamonds themselves are very hard to trade because they're very precious, they can get lost. You need to make sure that you know where they are. Now, if you have tokens, you can move like bits and bytes through the internet very easily. You just need to make sure you have a transparent system where you know each and every transaction, and you know who is the one that receives it. So it's actually linked to the banking system, because if you issue those tokens, you need to do KYC, know your customer procedures. You need to do anti-money laundering provisions. And the entity that we have that does that is actually fully regulated by the financial authorities, which is a necessity to do it right. But once you have issued that, on the secondary market, you can move it between arbitrary people. Only the primary market, where we issue the token the first time, that's the one which falls under certain strict regulations, not the secondary market.
And so, for those that aren't going to get to Julius's presentation, the same thing that you just heard about can also apply to somebody in Cameroon who's growing cocoa or maize, and they could do exactly the same thing now, because this is all decentralized and could be just as equally reliable, as long as you have the warehouse equivalent of the diamond vault that you just described.
I mean,
in
the really nice application of that is, besides it being a means for storing value and transferring value, is also for trade finance. So basically, a guy that produces agriculture products, he could actually pre-finance the whole operations through tokenization, and you can do this over multiple farms in multiple countries, so you don't have the risk if one of the countries goes at war, you lose everything. You can have a token which is backed by 10 different operations in 10 different countries, and it's very easily accessible.
So that's an exciting area. What's catching your eye in Turkey as some of the most promising fintech areas for growth?
Well, actually, the financial inclusion is still playing an important role in Turkey. So I would say the key asset that underlies this goal is the digital ID. And the very first time in Turkey, I think, it's one of the few times that all these banks are getting together and they're working on this blockchain-based technology so that we will have digital IDs. Once you have the digital IDs, once you can issue yourself and that you can prove with all the consent litigation, with all the pieces of information that you want to share with the related parties and you want to keep secret to yourself, that is going to be a massive step. And we as banks are working pretty hard on that subject. And on top of that, this will allow us to onboard customers much more easily. Of course, this will change the whole aspect of the system. Also, we also are in talks with a customs company, and so we're going to be working on a trade finance solution as well with this companies. And this is also catching the government's attention as well. So I would say I would put the digital ID on top of everything, and all the related transactions, the other business opportunities will be following that. And also, Turkey is a well-known country for payment systems, and I see that there are many startups that are doing all these payments technologies on different blockchain technologies. So that is also something growing, but maybe not being able to find the related place that they deserve within the country so far. And just one more thing, and also for the financial inclusion as well, I believe these thin-filed customers, not even customers, thin-filed people will have access to financing solutions through us in the near future as well, through other means that we can evaluate these customers. Those are all ongoing processes. Those are new pilot projects within the company. So that will also help us, get better at providing these services.
So this is really, you guys are doing a much better job than I did about describing the overall universe, because we talked about basic infrastructure outside of finance. We have connectivity, the internet, things like that. And then you're saying that ID really is the next layer above that, because if we don't know who we're dealing with, the individual, the company, then we're on shaky grounds. And once you have, and so there's a lot of potential there. And above that, you have what you call the payment system, and we could probably more broadly say that's the overall rails, if you will, where all sorts of value, whether it's money or goods, like diamonds or other things, move. And then on top of that, you started talking about, well, then we're going to have these people who we couldn't deal with before because we didn't have the information on them. Now we've got all sorts of information, but it's different. And that leads into a whole other kettle of things that we haven't started talking about, things like artificial intelligence and machine learning, new ways of model building, and that can deal with these masses of data and make sense of them in ways maybe we couldn't before. But before we go on to that, let's hear your picks for what's going to be the hottest stuff in Tunisia.
I don't think that today we can speak about hot stuff coming, even in the other countries. My point of view is that we are still all building the infrastructure. There is many initiatives, there is many tokens, many currencies, etc. So we are still looking to find the right model, if you want, or thing that will probably expand better and easier. And this whole thing is related to, you asked why Switzerland, it's related to digitalization. Everybody is becoming digitalized, and probably ID digitalization will be one of the things that is a kind of part of the infrastructure that will allow people use more fintech. But I just wanted to speak about another aspect of financial inclusion in this, is the fact that fintech is going today beyond borders. and many countries, emerging countries, are today have several political exchange policies that doesn't allow them to buy other currencies, etc. And probably this is also another aspect, if you want, of financial inclusion that fintech will probably help to avoid, because cryptocurrencies, you can use it everywhere in the world. For now, it's decentralized. You cannot, I mean, it's something that I think that fintech will be a game changer in the world in the next decade, and probably financial services will be completely transformed in the coming years.
Well, that's a very interesting perspective. First, it's fascinating that you're representing the techno park, not the financier like these two.
Yeah.
And you're the one introducing the justifiable note of, hey, there's risk here, you know. It's not all that everything's great. And then you also pointed out that this whole cross-border dimension adds a whole new area where there's a lot of possibility, but there are also a lot of issues. Because
in fact, one part of our mission, if you want, as a technopark, even if you are also having entrepreneurs supporting them, etc., providing them the services, but it's also one of our mission to have an inside look to these new technologies, to be aware about what is happening in the world, and to try to help the government and the different governments, especially at the World Business Angel Forum also, to help the policymakers, etc., to think what has to be done in the future in order to have this equal access to finance, if you want.
So what are some key, if you were going to give some key messages to your policymakers, what do you think are some of the lessons emerging about what are some good steps or what are some traps to avoid?
I think for now we cannot speak about traps to avoid, but it's important that every government or every policymaker should start thinking about how to develop a kind of framework, let's say, at least to let people work legally, because in many countries for now it's not yet legal. And this is very important for these countries to be to start some framework to let people work legally, because otherwise, I mean, people who are gonna work it anyway, they're gonna have cryptocurrency, they're gonna do it anyway, so it's easier for the government to start doing things like that. I come back to Tunisia with another reflection that we got. We are in transition period because of the revolution, etc., and now between 40 and 50% of the economy is informal. This is also very important for the government to start thinking about that, because it can help reduce this informality in the economy. Mm-hmm. It's very important for the government, but it's also very important for the people to get access to this kind of means of payment.
So we have 5 more minutes?
5 minutes.
Okay, I promised the audience I'd let them get in, so I didn't realize we had so little time. I let it go. Can we ask a few questions? Anyone have some questions you want to ask? And I'll take a handful, and then we'll let it go back. We'll start with this gentleman. Any other hands? I'm going to... There. Anyone else? Anyone else? There. Okay, 3. So this, there. Please, and introduce yourself before you ask your question.
Thank you very much. Peter Braun, serving on the board of IBAN. My question goes in the direction of, and we touched upon this point, right now the regulators are just the national regulators, but we're looking at a very international flow of funding. So, and this is why countries like Switzerland and Liechtenstein and some other places, Malta and so on, were quick in being the countries where they would attract new fintech startups because they were quick and somewhat easy in regulating. But this should not be the way it goes. It should not be the small countries, attracting financial industry. Is there any plans for you that you look at more international regulation of that? We also see in China things are banned, in the US and so on. They're not that far. I spoke to the EU Commission. They're about to regulate now crowdfunding, but not, blockchain-related things.
So this is a great question. I don't mean to sit you down, Peter, but I've been told I really should take only one. I want to take the other 2, but can you make them very brief, and then we'll try to be even briefer in having one or two respond. Over here, please introduce yourself.
Hi, my name is Pratim from Netherlands. Active in the tech scene in Netherlands. So my question goes to Mr. Gassner. So what will be the impact in terms of blockchain? Sorry.
Talk to me, Tubendorf here.
Thomas.
Yeah, it's okay. Difficult name. You can call me Thomas.
So basically, the banking is very important for Switzerland.
Yes.
So if Switzerland doesn't transition to the blockchain technology, what would be the impact for Switzerland, for the economy of Switzerland?
Great question. And last question, very quickly.
Kelvin Malabush from Nigeria. Actually, building on that question, the gentleman to the right hinted at the disruption possibilities of the financial services sector. I just wonder what the reaction is from the panelists from the financial services.
Okay, so you get to take one question only. So which one?
I think the first one.
Why don't you take the one to you? That's the
the
easy one.
ecosystem. Yeah.
And then anybody who doesn't, if you don't want to take the cross-border harmony among the regulators.
I think it's gonna you. The EFC, you probably heard.
Well, please talk about blockchain in Switzerland.
So banking is definitely an important sector in Switzerland, but it's not the biggest sector overall. It's less than 15% of where the value comes from GDP. It comes from banking and finance. So even if it goes completely away, Switzerland wouldn't die. But at the same time, it's of course a lot of jobs in this area and well-paid jobs, I have to say. So most people I would feel that would be people losing jobs in these industries. And the country itself is actually constantly rejuvenating by having lots of research being done. They have been on the global index of innovation for now 3 years in a row on #1 globally, which means they create a lot of research through private institutions, but also through research. And basically, it's a logical step to transform their business more digitally. But I also have to say the wealth management part has actually struggles to be digitalized, because there it's mostly about trust. And it's very hard to have a digital trust, especially if the technology is immature, if there's players you don't yet know because they have no track record. So this will take longer. And this is where digital identities come in, and all these processes where you have transparency. So I think digital identity is at the core.
Sarhan Bey, give us a few seconds on any of the other questions.
Okay, I wouldn't really be able to comment too much on the cross-border, alignment, but I see that every country is trying to do their best. Turkey is doing it on one side. UK is doing it, in a huge aspect, and every country is trying to play an important role so that they can help the fintechs mature in their own countries. I mean, many companies in Turkey are going to either San Francisco, or they're going to UK, or they have a presence in Netherlands somehow, but they're still doing business in Turkey. I think it should be either the World Bank or somebody else that cannot imply the countries to go this way, but they can just share the best practices. And every country, every government really has to have a good focus on what they can do better, and coordinate with the other countries in place. That's the best answer, I think within my expertise.
Very good try. A few last words.
Yeah, I think that you gave us an idea to prepare this for next year. I mean, at the World Business Session Forum, we're going to ask Bybars to prepare something about that for next year. But who knows? Maybe things going to come from the companies working on fintech. They already find their way. They already find how to work in several countries. So probably something will come from the company and not from the government, and with the different government will just adapt it. Who knows?
Two terms, my final 2 cents. 2 terms we haven't talked about, and we can have a sidebar about this at the break, because we have to let the last panel in. Platform and sandbox. So there are happening now, the FCA, the Financial Conduct Authority of the UK, which has kind of popularized the term sandbox, which is, we won't go into that now, but it's enabling its sandbox to be taken on the road, and there are a number of countries. And the IFC, just with the ASEAN Bankers Association and the Monetary Authority of Singapore, have created an ASEAN-wide platform for basically providing a sandbox for all the member countries and for fintechs and for financial institutions to meet. And it's early days, but I think that may be where we get that cross-country harmonization, because what you don't know, you're afraid of. And the first step has to be understanding, then we find solutions. With that, let me thank my panelists. They did a terrific job. Let's give them a big hand.
Thank you very much.
And we will turn to our kindly MC for the next.
Thank you very much, gentlemen.